Focus. Ideate. Innovate. Enable.
Sat Sri Akal, Chandigarh. So good to see you bright and early Saturday morning. The bull market clearly is intact. Every time we start the camp, I just take a bit of an audience poll to gauge the market sentiment. It's been a great year for mid-caps. How many of you have made money this year? Please raise your hands. Wow, that's a lot. And how many of you have missed out thinking that the market is too expensive and I'll wait for correction? Okay, that's a silent minority. So, interesting, because clearly the market has just moved one way forward, 24% gain for mid-cap index. So, I'm sure a lot of individual stocks would have done well. Okay, let's do one thing. We have lined up this investor camp in 4 parts. We'll have market technicals, market fundamentals, macros. Everything will be discussed, and then, of course, we'll have interaction with all of you. We'll try to take as many questions as we can in the time we have with all our experts. So I won't waste too much of time. I'll first invite the guru of technicals, Sudarshan Sukhani. A round of applause for him, please.
See, the presentation is one part of the message that I want to give you. The bigger part, the bigger message is that we are in a bull market. The bull market started sometime in 2013 when the market sensed that a change of government is likely. That was the reason for the bull market to start. And of course, the economy will do well, and that's why a bull market is sustained. This is not an ordinary bull market. I think of this as the mother of all bull markets. You know, we are at 9,100. It's nothing. 5 years later, you will see the Nifty at levels you cannot imagine now. 10 years later, you can't even speak about the numbers at which the index will be trading. So this is a market which is the best of all in the country, in the world, and it is a market where you must participate. Anush took a poll, and somehow you said that most of you are in the market in some way or the other. I come to Chandigarh often, meet many of you. And it is one of the savviest cities in terms of investors and traders, one of the best in India. So that is the reason why you outperform. Therefore, when I say that you should be in stocks, you must be in blue chips, you should be in mid-caps, don't miss out. You already know this. I'm just repeating that message. Chhodiyega mat. This bull market comes once in a lifetime. And it is only the beginning. That's the broader picture, that's the bigger theme. Let's assume, just for argument's sake, that the Nifty doubles itself in 7 years. Actually, it will double itself much faster than 7 years. But if it doubles itself in 7 years, the Nifty, only the Nifty, is giving you a 12% annualized return. No taxes on this. Compare that to a fixed deposit, you get 7%, then you pay 2.5 out of that as tax. So you are getting 4.5% or maximum 5% after tax in a fixed deposit as compared to 12% in a simple investment in the Nifty. If you simply buy a Nifty ETF, you are getting 2.5 times more. Why would you like to miss it? Just for a sense of false security ki FD theek hoti hai. It's not like that. Be bold. Chandigarh consists of bold, remarkable people. So go ahead, put a lot of your money in equities. If not anything else, put them in the Nifty ETF, in the Nifty Bank ETF. That itself will give you far more returns than fixed deposits will give you. And real estate will give you no returns at all in the next 15 years. So the way to go is to invest in equities. Shakespeare said, there is a tide in the affairs of men, which taken at the flood leads on to fortune. Many of you must be familiar with it. It's a very popular saying in his play Macbeth. So this is the tide in our affairs, in affairs of investors in India. If you pick it up now, if you catch the move that is just starting in the market, if you become an investor in this market now, it will lead on to fortune. We are just at the beginning of a massive market. This massive market won't happen in a month, won't happen in a year, but it's happening. It's already there. From 6,000, we have reached 9,000. And if you don't enter now, You will simply watch it. आप देखते जाओगे ये 9,000 से 18 हो जाएगा, तब आप सोचोगे मैं सोच के लेता हूँ ये 18 से 36 हो जाएगा. Don't miss out. Be part of this theme. Don't have a short-term outlook. Have a long-term outlook. We are in a long-term bull market. Remember this again and again. That's why I'm not talking about shares. Prakash, in any case, will give you a long list. And everything he says hits circuits. तो आप मंडे को पहले खरीद लीजिएगा. Buy good quality equity shares. CNBC TV18 has such excellent analysts and they give you the best of names. All you have to do, research भी वो लोग करके देते हैं आपको. पर घुसिए तो, बाहर से मत देखिए. Be part of the story now. Don't be aloof. With this, I wish you the best. I hope you make a lot of money in the mother of all bull markets. Thanks.
A lot of people have made a lot of money in this market, but still, a lot of people keep asking for multi-baggers. I don't know if Prakash is going to talk about multi-baggers today or if he has some interesting presentation lined up his sleeve. But you can be rest assured he'll give you at least one or two stock ideas. So let's welcome Prakash Diwan.
एक बहुत बड़ी समस्या जो लोगों रहती है, people keep on asking us this very often, saying, tell us how to research companies, not just the companies. So, this is that principle of rather than giving a hungry man fish, teach him how to fish. So I thought I'll use this opportunity to share some of the very simple things that I do when I identify stocks. It has been kind of working, okay? And that precisely is what I call understanding business models. So understanding balance sheets is one challenge, which I'm sure a lot of bright chartered accountants can do, and I'm not a chartered accountant, so I don't really spend too much time just doing that. But understanding the business model is what you need to do, because when you invest into equities, remember one thing, you are becoming a partner to that business. When you buy a share, what do? You buy ownership of the company, right? If you buy ownership into a business that you don't understand, chances are you need to be really lucky to make money, not too wise. So why is it that business models have become so important? Especially when, there's so much information flow that you have on companies and, the triggers that companies go through, developments that companies go through. All of us know a very simple concept called earnings and price. So what does this make? Something called the PE multiple. PE multiple suna hai aap log ne? Price to earning. And all of us love discussing this. Iska price to earning multiple bada kam hai. अब ये और बढ़ सकता है. हो सकता है प्राइस टू अर्निंग मल्टीपल इसलिए कम है कि deserves to be less. But that is the point that we all get attracted to. When you pick a stock, you do it for the price reward, not just for, let the company's EPS grow. Price भी तो बढ़ना है, तभी तो पैसा बनेगा. So the vector that works towards that is the PE multiple. If the PE multiple grows, if EPS grows, of course, the market cap also grows. But if the PE grows, the market cap grows exponentially. That's the beauty of a re-rating of a stock that happens. So if you can identify stocks that have business models that support PE expansion, you are definitely in for the right reasons. What is the level of complexity, range, variance? One of the successful models that Maruti has had in the market, forget the stock price, I'm saying as a car manufacturer, is the huge variety of variants that they have. You know how many models Maruti is till date introduced in the market? Any guesses? It's close to 33. 32, 33 is the range that they've already introduced. We've forgotten a lot of those models because they're no more available, as compared to its second biggest competitor who just has probably 9 or 10. So the level of complexity that they manage is what gets them the price that it is available at. Then you understand the processes involved in a business. This is very critical. Are these processes consistent with the functions and the geographies? What a company does in south of India is the same thing being tried in north, or is there a difference? Right? There are companies that, I go to Chennai, there are companies that have hoardings in Tamil. You go, the same company, same brand, it's available in AP, but they still haven't changed the board. They still use a lot of Tamil, which is there in their brochure. They don't have any regionalization of communication, language. These companies will never spread and become national players or international players. What is the impact of regulatory shifts? This keeps on happening in so many sectors, oil and gas, telecom. You can set back, the business can have a huge setback, a big impact negatively if the regulatory shift is negative. So is the company equipped to handle that? Is the company in a position to get over it? That's what you need to do. What are the changes in consumer behavior? This has already happened, retail, online, all those things that we do. And then the last thing is promise. Once you understand the company's business, you need to understand what is the promise it is offering to you as a partner. Is there scalability? Is the business scalable in the first place? Or बढ़ सकता है कि नहीं? Is there headroom for growth? Are there new consumers that would come? If that is not there and the business is perfect at this stage, you will not get value because it's fully priced. If it is not going to increase, and that's happened to a lot of newspaper publication companies in India, but look at what's happened to radio, which is same newspaper publication houses have set up radio businesses. And look at the radio businesses, the way they've grown, because there's enough headroom for growth. Newspapers probably don't because it's a dying business. So that is something which you need to understand when you analyze a business. What can you do to simplify this doable stuff? Interact with the company as a buyer, as I said. Visit their sites, visit the exhibitions they participate in. Every city has exhibitions of certain industry associations and all. Just go there, see what the companies are doing, how they are promoting themselves, what they're offering. Some companies only respond if you are an institutional buyer. Right? So I have also created a dummy URL from where I write and get inquiries done. Because otherwise they will not respond to you if you write as an individual. So we've done even some stuff like this. And it's all fair. It's to assess whether the company talks to you well. Talk to ex-employees of the company. They will tell you a lot about the company than the company officials themselves. Be a part of the company's progress. All events that happen, whether it's an AGM, a launch, try and attend that if you can. If you can't go physically, at least make sure that you take advantage of that. That's as simple as that. All of us can do this. You don't need to be a chartered accountant to do it. That's it. Thank you.
Well, we've discussed the fundamentals, we've discussed the technicals, but macros also play an important part. Let me invite Vivek Kumar, economist from Yes Bank.
My job here is to give you a weather check. My job here is to tell you how's the traffic looking like. And all of us are intelligent enough to make a decision that if I have to go from point A to point B, this is the best possible route that I should be taking. Well, with RBI now focusing on a much stiff target of 4%, we believe that interest rates are likely to remain on hold, unchanged, through the course of FY18. And it essentially means that the 10-year bond yield in the economy will be very, very range-bound because you're not likely to see any cues from the central bank in whether it should hike or whether it should cut in the financial year 18. So 6.7 to 7.2 is what we are expecting on the 10-year yield. USD INR, basically rupee, we are expecting a range of 66 to 69. We know that the currency is stronger than this range currently. Now, the reasons why we are expecting it to weaken marginally is because INR is slightly overvalued vis-a-vis its long-term average. And there is an expectation of interest rate tightening further incrementally by the US Federal Reserve. So which means the dollar in the currency market would be stronger and which will have an opposite impact of weakening other currencies. So because of these two factors, we are expecting a mild depreciation. But at the same time, I would say that there are risks to this call because there is still lack of clarity as to how the US policy regime, especially on the fiscal side, is going to proceed. And at the same time, the strength of foreign inflows. So we were extremely pleasantly, I would say, surprised by the extent of inflows that happened in the month of March. So March month, we saw a net portfolio inflow of $9 billion. And that was the single largest monthly flow ever recorded in the history of Indian markets. So having said that, don't ignore the risks. They would be plenty. So geopolitical risks, politics is going to be extremely important, not only for India, I think more importantly for the global markets. Starting Sunday, France is going up for elections and there will be important ramifications of it. If the leader is more I would say, centrist, which two of the four are, if those two get elected, I think it will be good for risk appetite in the markets globally. Equity markets should kind of move up if those two centrist leaders get elected. At the domestic level, I think the risk at this point is the populism at the state level, which is best avoided, and the slow pace in investment recovery, because largely the kind of growth that we are seeing right now is predominantly driven by the consumption sector. Investment is one engine which has not fired yet. So this is something which is going to take time, because there is still a lot of legacy issues both on the banking sector side as well as on the corporate sector balance sheet side. It will take time to resolve. While some of the enabling factors are getting in place, like a GST, a bankruptcy code, these are enabling factors for an investment revival. They are getting in place. But I guess the pace at which the recovery will happen will take its own time. So these are the risks that one should always keep in mind. And with that, I would say happy trading, happy investing, and best of luck.
So considering the recent RBI minutes, one should consider that the interest rate bottom out, or we should say that from here on the interest rate will rise.
So the message that we have inferred is that RBI is still likely to maintain its neutral bias. As I said, inflation is something which is likely to move up, but likely to move up because of technical reasons and not because of demand side pressures. So that is something which should not bother RBI a lot. And as far as reaching the 4% target is concerned, I think they will take some time, because their own forecasts for the current financial year indicates a 5% inflation towards the end of the year, which is higher than the 4% target for which they've set for themselves. Now, what does it do to interest rates? As I said, it is likely to be a very, very prolonged pause for the Reserve Bank of India, which means that the cues for yields in the interest rate markets would not be very, very dominant. So you would be more prone to what is happening on the global side than what is happening on the domestic side. So a range of 6.7 to 7.2 on the 10-year benchmark is something which can be played in the entire course of the year. So it will be a range-bound movement. So 7.2, the moment it gets here, you start accumulating, start buying. 6.7, when it gets there, you start booking your profits.
My question is to Prakash. See, all of us know that EPS, PE multiples, they are good indicators. But they are good companies. You mentioned Eicher Motors, in fact, Maruti. I would add Bajaj Finance, Bajaj Fin Services. These companies, they totally defy this logic of EPS and these kind of things. Now, what is the back of this when the prices go stratospheric without any, you can say, relation to fundamentals?
So typically, the best you can do is continue tracking the company. If you see a change in the company's growth trajectory, that's when you need to take some action or look at booking profits. But if things look the same way as they were when you bought it, and growth continues to fall in place, expansion will continuously happen also, because there's less supply, more demand for good paper and stuff like that. So Asian Paints, Maruti, all of them have had that trajectory. I don't think you should be very worried about it. Only when the growth stops or there's a reversal in that trajectory, some event happens, is when you need to be worried about. So, and there are enough indications on that. It's not a overnight event. You'll see growth starts faltering over the couple of quarters. Things don't seem as robust. The management commentary is not as confident. So you will get those indications, and that's when you need to pause, not because of a PE multiple that's reached 55 or 60 or something.
Very often, I have seen stop loss gets hit, but then price moves in the direction in which call was given. So does it mean that we should not strictly follow the stop loss?
For short-term traders, the stop loss is the most important part of your trade. You cannot ever change it. You cannot violate it. It happens all the time. It happens with you. It happens with me. It happens with all traders कि वो stop loss लग जाता है. उसके बाद में जिस direction में हमने trade किया था वहाँ चला जाता है. That's part of trading. You can't accept, you can't ignore it. You follow your stops without fail.
Okay.